Good day, traders. Welcome to Friday Swing. Today, guys, NFP day with Mr. Doug Rumer. Here
Hmm.
we are, guys, waiting for volatility to start, to kick off as presumed. London session pretty slow. At this point, it's waiting time for the NFP. So let's see. Let's wait for the NFP. I have this euro dollar short. I'm keeping it. But of course, the NFP will give us obviously the answer where the trades are going to go. So, Doug, how are you today? What do you expect from today's markets and generally NFP? Do you think
Uh,
that it will be positive or negative?
I'm sure you know what, honestly, I don't think it really matters. As long as it's not too ugly, um, I think it's
For
okay.
volatility, it matters a lot.
Yeah,
With this,
that way you're right about that. I think overall, in the grand scheme of things, it doesn't matter at all.
in
It'll
great scheme,
create
yeah, but
some sort
let's,
of
yeah.
trading opportunity. It'll give a little glimmer of volatility to possibly trade from, but I don't think it derails the course of this market at all. Not at all, unless it's terrible. I think they're pretty close to the estimates, so should be all good. But we'll see. I'd still say if it somehow if this market dips at all, should be bought. It was a pretty strong day yesterday, so typically they don't do back to back super strong days. But if you do get a big pullback there or something, I would be a buyer of it. Yeah.
You're talking about US markets, right?
Yep. Yep. I don't think it changes the course of anything that you're trading. So whatever, if you wanted in, say, long on something, this could open up the door to get that trade at a great price. If you wanted to short something, that could give you the move that you need to get into it. I think everything stays pretty much just as it is, and whatever move that
Uh,
counters what you're seeing is probably going to get recovered. But we'll see.
we
We only,
Yeah,
yeah.
we need to wait for retracement in gold. Gold is the best mover for the last days, but problem is to enter any long trade or enter any short trade. It's impossible now because market is just going up without any retracements. So if you want to go long, you really need to drop down to very low time frames, which I don't do. And of course, if you want to go short, you need to see a structure that will give you the frame for actually shorting it. So at this point, there is huge momentum in gold, which is going to the upside. Other markets, dollar yen, for example, is still going down, but I will buy dollar yen despite everything. I'm going to go long around 146.45 if we get there. So this is where my eyes are on. So 146.45. Big moves in the dollar, big moves in gold, and of course, I always say yeah, volatility is needed for intraday positions. So this is why we need NFP today to give us some possible trades. For us intraday traders, it's a must. Actually, we are not interested in the overall, as you say, grand scheme. It's not important. It's important what it moves for the day. So for today, I don't know what dollar will do. I don't know what we can expect from the NFP, but I know that the last couple of times we had ADP totally in contrary from the NFP. So actually NFP might come better than expected. If it does, then the US dollar will bounce. And generally speaking, this will be a subject to a revision. 353K versus 195. Look, it's a big gap here. So this will be probably subject to revision for the new result. Also, unemployment is important. It's full employment in the US. So whatever happens here, as long as the market, as long as the economy is below 5%, it's considered to be full employed. So this is full employment in the US. And of course, average earnings, it's predicted that they will take a hit, for example, with 0.3% compared to 0.6, but then it leaves the gap maybe for, uh, I would say, maybe a slightly higher earnings. Anyway, this is something that will create volatility. And also, Canadian data later, guys, also will create some volatility in the Canadian market. So expect violent moves today. after the NFP and the moves that will be much more pronounced than yesterday ECB. Because to be honest, guys, ECB was nothing special, and the traders more often look at NFP than ECB. So at this point, my expectation is that NFP will give us much higher volatility. So let's see. Of course, it depends also the deviation from the predicted numbers. So if the deviation here is, let's say, higher, much higher than expected, then the move will be even more pronounced. So it will really depend on these numbers here. If we see a huge volatility immediately upon the release, it means that there is a deviation from this number here. Because this is the most important data among the whole jobs data. Today, guys, we call it NFP, but actually it's jobs. So unemployment, non-farm payrolls, average earnings, all this is the package. Everything belongs to the package of what we call NFP. But this number here is the most important. Okay, so that is what I think can happen. Dollar had a big, I'm not sure that the Bank of Japan hasn't intervened by a little bit. Of course, we saw the drop from 150, but who knows what is in the background, because obviously Japanese yen is having, it's not just against the dollar. If we take a look at other crosses as well, we can see that even Japanese yen, pound yen is dropping a lot. Euro yen also dropped a lot. Swiss yen dropped a lot. All yen basket moved down, meaning that yen is strengthening. So it's not just about dollar, it's also about yen. Right. Black is here. What's the expectation of dollar? It will depend on the NFP black. We don't know that because, look, this is the predicted number. Above this number, dollar will be stronger. Below this number, dollar will be weaker. So there is no expectation until we see the result. Do you have something to add, Doug?
No, I think that's pretty good. I mean, all you can do is rehearse both sides. Whatever you're trading, everything can be affected. Some assets will be affected more than others, obviously. But whatever you're trading, figure out where you'd like to be a buyer, figure out where you'd like to be a seller, and then allow the report to possibly give you that opening. Like if you wanted to maybe short gold, if there was some way that you could get a parabolic, if that was your goal, maybe this report will give you a nice impulsive 10, 15 bucks or really strong move to look into that. If you wanted to be a buyer a little bit deeper level, then again, it might give you that opportunity. Anytime there's news, it's all, to me, it's always the same. There's an initial response to it, and it doesn't always mean that that initial response is correct. Sometimes it is, but a lot of times it's not. And all we can do is just let it happen and then adjust ourselves for both sides. If it's good, if it's bad, that's all anybody can ever do is have a plan if it's good, have a plan if it's bad. And the tricky thing is sometimes it sounds very bad in the beginning, but the market kind of just shrugs it off or whatever you're trading. It's like at first is a dump and it's like, nah, it's not really that bad. And then it rallies. That's why I said I don't think it matters in the grand scheme of things. Like US markets are bullish. A lot of these assets right now are bullish. Everybody is kind of in this FOMO chasing mode of buying everything they can get their hands on. And I don't think an employment report could sway that overall decision. So my thoughts would be any kind of pullback on any of these high flyers is just another opportunity to buy them. I think even if it's bad, in 15, 20 minutes, the market will create another excuse to rebuy everything. And they'll do this because at the end of the day, they really don't care about these reports as much as they care about the Fed. It's like, is this report going to stop the Fed from cutting rates? Yes or no? That's really all it comes down to. It's the Fed. The Fed controls this entire market right now, at least in my opinion, it does. And every report is not like I said before, when it comes to like employment, it's not as if the market really cares if you have a job or not, because they don't. They just care as like, is that going to give us some free money? Is that gonna is the Fed going to cut rates in July or June? Yes or no? And a strong job market opens up the door for some more cuts. So we'll see. Mhm.
Yes. Also, guys, welcome to our program, guys from YouTube. Welcome, guys, whoever is watching us on our YouTube. So T&Cs is here. NFP today gives us a signal. Yes, of course. T&Cs NFP is always is giving us a signal, of course, after the NFP, not before. I mean, if you are in a trade, you need to leave it, right? But after the NFP, the market will start moving much more than now because volatility is pushed by the NFP. A lot of volume is placed into the trades. So there will be signals, of course, after the NFP. Uh, it's also important that you understand that mostly these markets had retracements before, and now we see that, for example, dollar yen is always reacting heavily on this data. So look, I think that 88.6 here will give us an entry. If we don't get it, then market could eventually start moving up from this level. So it will depend where it will be before and prior to NFP. But yes, I expect, because I trade mostly forex, gold, crypto. I'm not into indices trading and stocks trading. So Doug can explain about it. For me, guys, forex is the market that needs volatility. If you don't have volatility and you still want to make money, you need to leverage up your trade, because right when there is no volatility, you cut your target, and for some feel of the money, you really need to get a little bit more of the leverage into the trade. Anyway, my opinion, guys, is that it is going to be volatile. We don't know what will happen because we don't have the data in front of us. First, it needs to be live, and then when the news is out, then we know what the next move will be. But whatever happens, I'm a technical trader, so I will be going with technicals, of course. Unfortunately, there is a bit of stagnation here in terms of retracement when it comes to gold. We don't have any retracements, and we haven't had any retracement since last 7 days. So it's been constant push up without us intraday traders having some price action. Of course, indicator-based system can always give you some trades, but for megatrend price action, no, we don't have shorts here, unfortunately. Now, I'm looking at this consolidation. It could give maybe some indication of the short move. But look, if you want to buy, you really need to have the price lower. This is my opinion. Even if it means skipping out some trades, and I don't have any FOMO, it's fear of missing out. I really don't have it. So I will skip some of lower time frame longs in the favor of longs that will sooner or later happen down there, right? So this is what I'm expecting. I think that next long could be around 2140. So this is the order block. This is the level to watch for. And if we see today, probably we will the way towards higher levels will be open. But let's see first the data. I really don't know what the NFP will be. Nick is here. Benjamin is here. Euro Swissy, please. All right, Benjamin. Long time, guys. Happy to see you healthy. God bless you. Kindly comment on dollar, yen, pound, euro. We'll do, Benjamin. We already did it, but since you are a little bit late, we will do it again. So, Nick, Euro Swissy. Euro Swissy, I never trade because it's one of the worst markets. To be honest, it's one of the slowest markets that exist in the world of forex trading. So if you open Euro Swissy, you will notice that the ATR is 41 pip for the last 14 days, 41 pip for the last month, for the last 3 months, 47 pips. The only market which I think can be worse than this is Euro GBP, which has 27 pips for one single day. Guys, this is what gold makes in 1 minute. So uh, if you ask for my opinion, I will never trade this until I see that volatility changes. But actually, what I see now is short because the market is at 88.6 resistance. You have daily opportunities to go short. You can see that it's already playing out. But since the market is very slow, you don't have a lot of pips to take. What is your view on Euro Swissy, Doug?
I would agree with that too. I think your money is better allocated elsewhere. I mean, if you're looking at the chart and you're like forcing somebody to take a trade there, I would probably go long. Since on the daily, on the 4 hour, you've got a couple of wicks there. 1 hour, you got some support maybe for a short-term trade.